Have you ever wondered why some stocks move like crazy while others seem to glide smoothly over time? The secret behind that behavior often comes down to a simple number called beta. Not the software kind, the financial ratio. It's a small number with big meaning, telling you how volatile or stable a stock tends to be. In today's video, we'll break down exactly what beta is, why it matters for your investments, explore real-life examples across different industries, and I'll even show you how to find a stock's beta on Yahoo Finance. Welcome to Smart Money, where we make investing simple and easy to understand. Just a quick note, this video is for educational purposes only and not financial advice. Let's start with the basics. Beta measures how much a stock's price moves compared to the overall market. Typically, the S&P 500, which represents the 500 largest companies in the U.S. and acts as a snapshot of the country's market health. Here's how it works. A beta of 1 means the stock usually moves in line with the market. A beta greater than 1 means it's more volatile. It moves faster and more sharply, both up and down. A beta below 1 means it's less volatile, steadier, and less reactive to big market moves. And a negative beta, which is rare, means the stock tends to move in the opposite direction of the market. But remember, two stocks with the same beta 1T move in perfect sync all the time. Beta just measures general long-term correlation with the market, not minute-by-minute changes. Let's see how that looks in real life. Take Amazon, for example. It currently has a beta around 1.31, meaning it's more volatile than the market. If you compare its chart to the S&P 500, you'll notice that between 2022 and 2023, Amazon dropped harder during the downturn, but bounced back faster when the market recovered. Now, contrast that with Coca-Cola, which has a beta around 0.5. That means it's more stable. During the 2020 to 2021 rally, it grew steadily without huge spikes. And when the market pulled back in 2022, Coca-Cola barely dipped, showing its resilience. These examples highlight what beta really shows, how sensitive a stock is to market moves. But keep in mind, beta isn't perfect. Market conditions, breaking news, and company-specific events can all cause short-term deviations. Think of beta as a risk thermometer. It doesn't tell you how good a company is, just how much its stock price tends to move. Depending on your risk tolerance, beta can help you pick the right mix of stocks for your portfolio. Let's quickly look at how beta differs across major sectors. Technology. Stocks like Tesla and Nvidia often have high betas 1.5+ because they're fast-growing, speculative, and heavily influenced by investor sentiment. Consumer staples. Companies like Procter & Gamble or Coca-Cola usually have low betas 1 since people buy their products regardless of economic ups and downs. Energy. Big oil players like ExxonMobil or Chevron generally have moderate betas 1 because they rediversified and more stable, even though smaller energy firms can be more volatile. Utilities. Power and water providers such as Duke Energy often have very low betas 0.5. as demand for their services stays steady year-round. Financials, banks like JP Morgan Chase or Goldman Sachs tend to hover around 1, moving closely with market trends and economic cycles. While beta is helpful, it's not the full picture. It comes with a few limitations. It's based on historical data. Beta reflects how a stock has behaved, not necessarily how it will behave. Market conditions change, and so can volatility. It ignores company-specific risks. Beta doesn't consider management decisions, legal issues, or regulatory changes that could impact a stock's price. It measures volatility, not returns. A common misconception is that higher beta means higher returns, but that's not true. A stock can swing wildly and still underperform the market. So while beta is a useful metric, it shouldn't be your only tool. Combine it with other research before making investment decisions. And if you've made it this far, I've got a quick bonus for you. Let's look at how to find a stock's beta on Yahoo Finance. Go to your browser and type in the company's name, followed by Yahoo Finance. Open the company's page. Scroll down to the statistics section, that S, where you'll find its beta value, along with other key financial metrics. If you enjoyed this breakdown, make sure to subscribe to Smart Money for more simple, no-nonsense investing videos. It really helps support the channel. Thanks so much for watching, and if you liked this video, you'll probably enjoy this one next. Go check it out, and I'll see you in the next one. Bye.